Good morning, you're watching Daybreak on Bloomberg Quint Live and I'm Alex Matthew. First, let's look at the headlines. Finance Minister Arun Jaitley will present Union Budget 2018 just a few hours from now. The government revises FY16 and FY17 GDP numbers a day ahead of the Union Budget. US Federal Reserve keeps the rates unchanged, but the likelihood of a hike in March rises. It also announces additional borrowing after 8 years. Back home, automakers are expected to post healthy sales growth in January when they come out with their monthly numbers today. Turning to the international markets now, the US stocks rose on Wednesday, capping off a strong start to 2018. The Dow Jones Industrial Average and the S&P 500 notched their best monthly performances since March 2016, and that's despite the recent sharp two-day sell-off. Gains were aided by stronger than expected earnings. Bloomberg's Abigail Doolittle wraps up all the US market action in this report.
Wednesday's Wall Street session brought about a bit of a rebound, with the major averages finishing slightly higher, but it was also a roller coaster day because these slight gains for the Dow, S&P 500 and the NASDAQ, less than 0.3% fractional for the S&P 500, come after 2 days of declines, a big sell-off, in fact, on Monday and Tuesday. And early in Wednesday's Wall Street session, stocks were sharply higher. So lots of volatility. This, of course, follows President Trump's State of the Union address on Tuesday evening, a very optimistic tone. But the Fed did give its policy statement for January. No changes, but there was a slightly hawkish tone there. That helped to push bond yields higher, and in turn, that pressured stocks. So that was a macro influence. Micro-wise, earnings, that continues to be a big deal. Boeing had its best day since July of 2017, really soaring on a very strong fourth quarter and optimistic outlook. After the bell, both Facebook and Microsoft reported. Now, in early reaction, both of those shares are lower. Facebook on user growth not quite meeting expectations. And tomorrow after the bell, of course, it will be the big one, Apple. Apple will be reporting its December quarter, importantly giving guidance for that March quarter. Shares finished modestly higher on the day, the first up day in 3, but lots of curiosity as to whether or not the iPhone demand is weakening or perhaps it is very strong. But there have been lots of reports and negative bearish commentary from Wall Street analysts on the possibility that there could be some weakness ahead for Apple, and it really could set the tone, whether it's bullish or bearish, that Apple report relative to lots of the volatility that we've been seeing recently and saw once again in Wednesday's Wall Street session, with some whipsaws up and down, but ultimately stocks did finish slightly higher. In New York, Abigail Doolittle, Bloomberg News.
Well, that's the word on the US markets, but just a small take on the Asian markets as well. They've mostly opened in the green, with the Nikkei leading the charge. It's up over 1%. It's gained further from the gains that it had in early trade. But let's now turn to the Indian markets, and Darshan Mehta and Agam Vakil are here to set you up for the day's trade and all that's happened in the futures and options space. Darshan, first to you. Signs of nervousness ahead of the Union Budget. Yesterday's close indicated that.
Yeah, a little bit, but again, the SGX Nifty has recovered from the day's low. It's not up very high, but nevertheless up 10 points. It was trading with a negative bias in the morning trade. So the SGX Nifty is indicating a positive start to our markets today. So that's positive. Most of the ADRs also were decent in trade. What didn't do well was Dr. Reddy's, Infosys, Tata Motors and Vedanta. They were down in trade. The other ADRs that we need to watch out are HDFC Bank, ICICI Bank and Wipro. So the heavyweights, HDFC Bank and ICICI Bank, were up in trade. Now, if you're looking at what happened as far as, the crude setup is concerned, for the past 2 days, crude has again been moving up. So if you're looking at how crude has been panning up, it's moved up for the second day in a row. Even if you're looking at the commodities itself, most of the commodities on the LME have done well. So that's the positive cues that we're getting in at this point of time. The other factors that you need to watch is how the Chinese markets have opened. Most of the commodities in China have opened with a positive bias. So you can see that copper as well as zinc have opened positive. Here you can see across the LME, most of the base metals on the LME traded with a positive bias. The major move came in from zinc as well as nickel. Now, if you're looking at gold itself and precious metals, they are trading muted for the past few days. So commodities as a pack is doing well both on the LME as well as China. Crude has also managed to recover. Now, as far as fund flows are concerned, what we're seeing is the fact that FIIs, DIs again have been aggressive buyers as far as this month is concerned. So on a month-to-date basis, what we've seen is DIs again have turned into the positive with a 1,290 crore buy yesterday. FIIs are marginal sellers. So almost close to 13,600 crores of net buying has already happened in the market. This thing, so close to $2 billion of money is already come in ahead of the budget. Now, the Nifty Bank managed to come into the positive. It did rally because of certain banks that moved up, but the Nifty managed to stay on the negative side. So for a couple of days, there seems to be a lot of weakness. But again, selling is very heavy as far as the small caps and the mid caps are concerned. So there is where the trouble is, because the broader markets is seeing significant amount of selling. Real estate and pharma were the other two sectors which saw selling that came about in trade yesterday. Now, as far as the contributors are concerned, Nifty was down 21 points. What contributed? Reliance, HDFC, as well as Kotak Mahindra Bank, HDFC Bank. So the banking, financials as well as Reliance contributed positively. Tata Steel was down mainly on account of the rights issue. So it got adjusted on the rights issue. That is why this price is being shown. Infosys and ITC were weak. ITC remains weak ahead of the budget. But 21 points down, again close to the 11,000 crore mark. Ahead of the budget, where are positions being taken, Agam?
Well, again, the same as we saw in the previous few sessions. Starting off with the futures, what we're looking at is about unwinding. So a lot of traders out there didn't want to go in with too much of positions before the union budget, which is why we're looking at a decline in openness for the Nifty futures. And when it comes to the Nifty Bank futures, when the index moved up by as much as 0.4%, we saw unwinding of 4% here as well. The India Volatility Index again has made some interesting moves. It's fallen further, now below 16, and moving in, we're also looking at the put call ratio. Well, that currently stands at around 1.29, so not too much has changed there. But in terms of changes in open interest, what we've now started witnessing is more and more writing in the upper levels, such as the 11,300, 4,000 and 500 calls. Nothing too much to speak for otherwise. Well, in terms of changes in the stock futures, we have Fortis Healthcare and Gen Irrigation enter the F&O ban, expect restricted trade there. And we're keeping an eye on a bunch of counters which saw fresh shorts building in. So Escorts is one of them, where the stock was down 2.5%, and Arvind was the other counter, which saw a lot of weakness on the back of fresh shorts building in, where the stock moved down by as much as nearly 3%. A bunch of stocks here and there which did see a lot of volatility, but the benchmarks and the constituents will be the most impacted by as we move into today's day of trade with the union budget coming in.
Thanks so much for that, Agam. Let's move on to some macro data now. The government has revised GDP growth numbers for FY16 and 17. The new numbers take into account a lower base. Nikunj Ori sums up all the details in this report.
The Central Statistics Office, in its first revised estimate, has kept the GDP growth for financial year 16-17 unchanged at 7.1% and has revised GDP growth for financial year 15-16 upwards to 8.2% from 8% estimated earlier. In terms of real gross value added, the CSO said that the GVA growth for financial year 16-17 has been revised to 7.1%, which compares with the earlier estimate of 6.6%. For FY 14-15, the CSO has revised GDP growth to 7.4% against the earlier estimate of 7.5% put out by CSO.
Now, India's 8 core industries grew at a 4% growth, or rather the growth was at 4% on a year-on-year basis in December. The 8 core industries comprise coal, crude oil, natural gas, refinery products, fertilizers, steel, cement and electricity. Now, the core sector growth rate in November 2017 was revised higher to 7.4% from the earlier reading of 6.8%. Now, growth in the cement sector was the highest amongst the 8 sectors at 19.6%, and steel production also grew at a healthy 6.7%. The laggards, however, were coal and crude oil, where production declined in December. Let's turn to the rupee and the bond market now, and Saloni Dhanuka joins us with all the details there. Saloni, bond yields on the up for the 6th straight month?
Absolutely, Alex. Talking about Indian rupee first, it broke out its two-day consolidating range yesterday and managed to end higher by a modest 2 paise at 63.59 levels against the dollar. Now, the home currency slipped as much as 0.2% intraday to touch a fresh one-week low of 63.75 a dollar. However, weak dollar overseas along with sliding crude oil prices provided much-needed support to the rupee. All eyes will be on the federal budget today, so currency market as well as bond markets will be taking cues from the federal policy. Moving on to debt market, as you mentioned earlier, that bonds declined for a 6th straight month, and on the back of concerns that the government may announce a wider than expected budget deficit today, while yields on the benchmark 10-year security rose 11 basis points in January to 7.43%. While in terms of inflows, global funds increased their rupee debt holdings for the 4th consecutive session yesterday. They infused close to 240 crores according to NSDL data. Well, on the global front, in line with expectations, US FOMC left key interest rates unchanged while emphasizing the need for further gradual increases, thereby boosting odds of a March rate hike for about 90% according to a Bloomberg survey. The Fed said inflation will stabilize around the central bank's 2% target this year. And speaking of the dollar, it extended losses for the 3rd straight month and it was down over 3.5% in January. And coming back home, dollar rupee is trading at 63.67 levels against the dollar in the non-deliverable forward market, which indicates a weaker opening for Indian rupee in today's trade, Alex.
Thanks so much for that, Saloni. Now, we're turning over to budget and the important numbers to look for, and particularly with regard to the economy, we're talking about fiscal deficit. The higher borrowing costs driven by fears of a wider central bank fiscal deficit would be counterproductive. That's the word coming in from the chief India economist at HSBC, Pranjal Bhandari. In a chat with Bloomberg Quint, she further states that we need to remember that the next couple of quarters of GDP will have a low base and may push up the prints of growth going forward. Listen in.
If this year the government inches at 3.4 or below and next year 3.2 or below, I think the market will be able to digest that. But I worry that anything more than that, it will become very difficult for the markets, especially because it's not just the central government borrowing, it's also the state government borrowings on top of that. If the government dissaves by running higher fiscal deficit, it just squeezes out the revenue pot which is available for MSMEs and small businesses. So really, I don't see too much benefit from the government actually running a high fiscal deficit on any front. Let's still be very careful. I know 1 or 2 prints have been good, but also remember that over the next 2 quarters of GDP data, we'll have a very low base, and the base effect might be pushing up the growth prints. So don't get a lot of comfort on that. Sort of look through that and think about where growth could be in the next 3 to 4 quarters. And once you look at that carefully, it doesn't seem like too many drivers of growth are working really well right now in a very sustainable manner. And the one sector I really want to touch upon is exports. I feel it's a low-hanging fruit. World demand is growing very rapidly. Now's the time to make advantage of the exports growth. Yeah. But it seems like we haven't been able to. True, exports is a bit better than last year, but in some of the other countries, for example, Bangladesh, Vietnam, and so on, the exports recovery in the last couple of months has been, far higher than in India. So what is it, that's holding India back from reaping the entire benefits of this world growth that we're seeing over the last year?
Well, the other question is, will he or won't he, with regard to the markets, long-term capital gains tax? It won't really matter, is what Hiren Ved of Alchemy Capital is saying. However, Saurabh Mukherjee of Ambit Capital says that it would give foreign investors the jitters. Listen in.
I think we have to understand the nature of the market, that the markets will only worry about something that is not expected. I mean, if you have such open debates about capital gains tax well before the budget, my sense is that it's not going to really matter. If
that's
you ask
the idea,
me.
right? Prepare people in advance.
Yeah, I mean, you release a balloon and then you decide whether you want to float it any further. My own sense is that it doesn't make sense, because if you have a big disinvestment program, why why disturb the apple cart, right? Secondly, when you bring in long-term capital gains tax, I presume that is in lieu of STT. There's far better visibility on what revenue you can get on STT than you can ever fathom what you would get from capital gains tax, right? So those numbers are not really great, and for a few thousand crores, why risk the sentiment, so on and so forth. But that's the rational side of me speaking. I don't know if there is a symbolic side to this. Some people may argue that this was brought in when equity markets were not doing that great in 2004-05. We were still in the early stages of a bull market. Now, people have taken to equities, to SIPs, the money's in, people have been rewarded, and then, they should be paying a tax. But again, if you ask me from a probability perspective, I think it's a very low probability event, but you never know.
If you want to sort of queer the pitch for foreign investors, this certainly would give them jitters about an unconventional policy introduction quite abruptly. My own sense is if you mess around with LTCG, you do it immediately after elections. To do it in the 12-month run-up to elections, to do it at a time, as Hiren is saying, where you'll probably target 1 trillion rupees of disinvestment, will certainly be a very counterintuitive move.
And the budget should offer fiscal and tax incentives for home buyers, along with faster approvals for construction of homes for the success of affordable housing schemes. That's according to Keki Mistry, the Vice Chairman and CEO of HDFC. In this excerpt from an interview with Bloomberg Quint, he lists 6 broad themes that the budget this year is likely to focus on. Let's listen in.
There will be 6 broad themes within which the budget will revolve. This is my view. The first theme will revolve around job creation. Job creation is very critical for the economy because job creation will result in incomes. Income will lead to more consumption. Consumption will lead to faster capacity utilization. And it is because of the fact that the capacity utilization is low that we have seen a slower pick up in the capex cycle. The second theme of the budget will revolve, to my mind, around housing. Housing is a very critical aspect of the economy. It creates so many jobs. There are so many sectors in the economy which are dependent on the housing sector, whether it is cement, steel, paint, power, and so on and so forth. And a boost to the housing sector will result in a whole lot of jobs getting generated. So I think housing will be the second focus area of the budget. The third focus area of the budget will be infrastructure, government spending on building roads, bridges, rail lines, and stuff like that, because that also creates a lot of jobs. The fourth theme of the budget will be on the rural economy, measures to be taken to give a boost to the rural economy. The fifth theme of the budget will be on the SME sector, so some measures to boost the SME sector. And the last theme of the budget, to my mind, will be steps to encourage more savings. So these will be the 6, in my view, 6 broad themes of the budget.
Well, shifting focus to earnings now, ICICI Bank, L&T and Vedanta reported their Q3 results post-market hours yesterday. Our team of researchers is here to take you through all the key highlights in those 3 companies. Shraddha, starting with you first, ICICI Bank, it missed the estimates with a lower than expected profit.
That's correct, Alex. ICICI Bank missed estimates with the net profit falling by about 32% to come in at 1650 crores. But the strong earnings growth and loan book growth were the key highlights of the quarter. The total loan growth came in at 10.5%, while the domestic loan book growth came in at a 5-quarter high of 16%. With respect to the asset quality also, it continued to move on the path towards normalization, with the gross NPA number coming in at 7.82% versus 7.87%. Additionally, the bank said the RBI audit of their book for FY17 does not require any divergence disclosure. Broadly, brokerages have taken this earnings positively. You have Credit Suisse, which has retained the outperform rating but increased the target price from 347 to 405. What they're saying is that the provisions may remain high in the fourth quarter, but they are expecting gains from stake sale of ICICI securities to cushion profitability. And they also say that the bank remains the best capitalized corporate lender. Morgan Stanley has retained an overweight with a target price of 480 on the bank. They're saying that they expect it to show continued progress on asset quality over the next 5 to 6 quarters. bankers, and ICICI Bank remains their top pick for 2018. But listen in to what Chanda Kochar had to say.
Additions to NPA this year should be substantially lower than the additions in the previous year. And I think the trend that is emerging still makes us believe that the additions would be lower. I think the provision level will remain a little elevated for a few quarters because, of the NCLT provisions. Also, as the NCLT cases get decided, then you will know the final provisions to be made in some of the existing cases. Plus, some of the aging provisions come for the existing NPA cases.
Well, Darshan, a strong quarter from Larsen and Toubro on the back of healthy order inflows. What are the other key highlights?
Yeah, so the numbers were good. A double-digit revenue growth on a high base is something that is good. Operationally, also they did well. As far as the profit is concerned, that also came in higher than what was anticipating. So almost close to 11% is the EBITDA margin that L&T did. Now, in terms of the commentary and in terms of and firstly, more important is the order inflow. Now, they've gotten orders worth almost 48,000 crores, much higher than what the street was anticipating. We were anticipating close to 40,000 crores of orders to come in. So that is extremely positive. Order inflow was very strong. But what they said was that, a couple of orders over the past few quarters because of issues like GST and implementation didn't come in. So they all came in. So there were no major new orders that came in. So those were the major orders that came in. But at this point of time, if you're looking at it, infrastructure and hydrocarbons were the two sectors from which they got in the orders. Now, as far as the guidance was concerned, they maintained their guidance on all front, whether it's a margin improvement of 25 basis points, whether it's the revenue guidance or whether despite such an strong order inflow, they maintained their flat order inflow guidance for the full year. As far as the sectors were concerned, it was infrastructure, it was IT, it was heavy engineering, it was hydrocarbon, it was the development projects that actually helped significantly as far as their revenues were concerned, and even in fact the margins are concerned. The only concern that probably came in was an extended working capital cycle, but apart from it, most of the brokerages have given a thumbs up to this result. But let's also hear into what the management had to say post their numbers.
Share of international orders have shrunk from 1/3 of the order inflow in the previous year to about 16% for the quarter and about 26% for the 9-month period. We do believe that this ratio of 3/4 domestic, 1/4 international could be the situation as we get towards the end of this year.
On to the commodity space now. Higher zinc and oil prices have aided Vedanta's third quarter EBITDA numbers. What were the other factors at play for the metal major, Nikki? Nikki joins us with the details here. Nikki, over to you.
Hi, Alex. So the net profit of the company has come down 4% on year-on-year basis to a number of around 2,053 odd crore, which is a little miss from what we were estimating. However, the operational performance, as you just mentioned, was in line with our estimates. The number has come up 15% higher on year-on-year basis at around 6,763 odd crore as compared to nearly 6,603 crore that we were estimating for this quarter. Also, factors like margins at 28% were completely in line with what we were estimating. Now, EBITDA was driven by your higher zinc and oil business, as you just mentioned, and along with that, volume ramp up at aluminium smelters is what also aided the operational efficiency, along with the plant availability at TSPL. TSPL also aided. Currency appreciation and lower sales both in your iron ore as well as your copper division offset some of the gains that we saw on the operational level. Bottom line was impacted mainly due to hardening of yields. We also saw a dip coming in the other income. The other income was lower by 44% year-on-year basis and also 37% sequentially. Also notably, the net debt to EBITDA, although at comfortable level, but then sequentially we did see some uptick there on sequential basis. In terms of guidance, encouragingly, the company has guided that the cost of production for aluminium business is expected to come down in Q4. However, for Zinc India also, it sees some kind of moderation going forward in the next quarter. However, for Zinc International, it does expect a temporary increase for the March ended quarter to around 1,700 per ton due to currency appreciation. Also with that, let's listen into what management had to tell us after the earnings.
We have a very strong cash flow in this quarter also, about 4,700 crores. Plus, if you see our net debt to EBITDA ratio, This is 0.7. And this is one of the perhaps industry-leading numbers, both in domestic as well as in the international globally also. Our cost pressures come from input costs for some of the commodities which we use. It's mainly the coal, which impacts across all businesses. It's fundamentally to do with the availability of coal today, which we thought actually would ease up in this quarter. But while we see some signs, but not to the level we expected.
Now, Shraddha has got all the stocks in news for you. Shraddha, what's on your list today? But, all focus on budget anyway.
Yes, but you could see some of the individual names reacting to news, Alex. So starting off, we have IIFL Holdings, which has announced a Group D merger. So what will basically happen is you will have 3 separately listed companies for each of IIFL's distinct businesses. One is for the wealth business, one capital markets, and one for NBFCs. Having said that, they require multiple approvals, and they've said that this entire process could take about 10 to 12 months. So that's big news. Uniply Industries is another one. They will acquire 100% stake in Art Matrix Technologies, and they will also raise a total of 600 crores via preferential equity issue to promoters and also an issue of convertible warrants to the promoters. Quest Corp, again, a couple of acquisitions lined up. They've said that they will acquire Monster.com for $14 million and they will acquire HCL Computing Products for 30 crores. You also have TV18 Broadcast, which will be in focus. They have increased their stake in Viacom 18 by 1%. To 51% for a cash consideration of $20 million. Amtech group of companies could be in focus as well after Amtech Auto said that NCLT has granted an extension of 90 days for insolvency proceedings. Another smaller name, Jindal Stainless, they will raise 1,200 crores via issue of securities. Indiabulls Ventures will raise 2,000 crores via rights issue, for which they've fixed a price at 240 per share. And lastly, we could also see some reaction on Suntech Realty on the back of its foray into affordable housing. Yes, of course, on the back of any announcements on the same in the budget, Alex.
Absolutely. And that's the word, the budget. We're going live with the budget speech when it starts on Bloomberg Quint Live. And also immediately after, we'll have all the analysis of all the announcements that could come in at the budget for 2018. But with that, it's a wrap on this edition of Daybreak. All you need to know is up next. Do stay tuned. This is Bloomberg Quint.